Hello, everyone, and welcome to another Wall Street for Main Street podcast. Today, we have a returning guest, Marin Katusa, Head Energy Analyst at KC Research. Marin, welcome back.
My pleasure.
All right. First thing I wanted to get into today was recently this oil price has had a correction. It's gone, I believe, from roughly 105, 107 to around $90. I know Brent's taken a real dip lately. What do you think of this correction? Do you think it could be financial warfare, or do you think it's just a consolidation phase? What are your views on it?
Well, I think it's a very natural correction. It's not financial warfare by any means. What is going on is, the U.S., for example, the average, according to the EIA, the average imports per day in the U.S. for the month of September was about 7.4 million barrels a day. Now, a decade ago, so the month of September of 2004, it was about 9.5 million barrels imported daily. So you can see that, the Americans have been very successful in domestic production, and that difference of 2 million barrels is now rushing towards Asia. And the reality is that Asia is slowing down a little bit, and the demand for oil isn't increasing currently. Now it's staying stable, but the biggest importers in the world are number one, the U.S., number two, China. So the Americans are producing more domestically, so they need less of the international oil, and China is slowing down a bit, and therefore importing, roughly the same as they were last year, but because there's more international oil available that isn't going to the U.S., the price goes down. So it's simple supply versus demand metrics.
All right, I definitely see that. And you were bringing up the U.S. producing a lot of oil. I would attribute that to the shale oil boom, especially Texas and North Dakota. North Dakota, though, I know is nothing new. In terms of the shale oil boom, do you believe this is a legit boom where this is going to last a long, long time and this has conquered peak oil? Or do you believe this hasn't prevented peak oil or has postponed it?
Look, I've never believed in peak oil. For a decade, I've been saying that, the industry will always find their own metrics. I've written about this in 2006 and 7 and 8. And the reality is that this shale revolution is not just real. It's going to stay and get better. The industry, let's just say in 2008, 2009, doing a 8-stage frac was seen as complex. Now they're doing 64-stage fracs, and from the same well, they're drilling over 50 wells from one platform. So you're looking at, the game has changed. It's only going to get better. But the reality is that what cost? So the cheap oil is gone. So I believe in peak cheap oil. If you look at the Eagle Ford with the condensates and the liquids, you're looking at maybe $65 US barrel to break even. The Permian's probably somewhere around 75. North Dakota somewhere between 65 and 70. So the reality is that yes, there can be a lot of oil produced, but if oil goes below $60 a barrel, there's a floor for the shale game, and it could last maybe a little bit, but any new development won't work, just like the Canadian oil sands. It needs, for old production, $65 a barrel just to break even. Any new production needs $100 a barrel to come online. So the reality is the shale revolution is real. It's here to stay, and it's only going to get better, and it's going to expand to other areas in the world. But at what price? If oil goes below 60, you'll see any new developments of shale wells cease and stop.
Yeah, you definitely talk about Europe too. I know I've heard you frequently speak about Europe and their shale oil. Can you explain a little bit about how that's progressing, or if that's still years away?
Sure. I was the first one to write about the potential of the European shales back in 06 and 07. And it is going to be a big sector. Now, remember, it took a couple of decades for the U.S. shale sector to develop. When you look at guys like Harold Hamm and George Mitchell, they've done a great job. For example, Mitchell Energy was sold to Devon. Now, the European shale game does not have the American ingenuity and the sector as it was. You look at the Bolin Shales in the UK. That was a company by Quadrilla that we recommended in '07. It's done fantastically well. You look at areas like Germany Germany makes up 25% of the cash flow of Gazprom. The reality is these are past producing oil fields that have never seen any modern North American technology like horizontal oil wells. This is just coming. It's going to take a decade to start really hitting the Europeans. It's going to hit South America and areas like Argentina. It's going to be fantastic with the Yucamorte Shale. Mexico is going to be a big boom in the next 5-10 years, bringing North American technology such as fracking and horizontal wells. And you're going to see that spread across the world. So over the next 20 years, you'll see the technology come to areas like the UK, Germany, Argentina, and Mexico.
Yeah, okay, that sounds interesting. I definitely look forward to seeing that. Also, in terms of shale in Europe, I was going to talk about nextly your book. You're writing a book called The Colder War, having to do with Putin and his energy, I guess power grab is what you would say. Could you explain a little bit about that?
Well, it's not necessarily a power grab. He has the power. People forget that Russia has 25% of the world's gas conventional reserves. They've got over 40% of the uranium reserves and refining capacity of uranium. 1 in every 10 homes in America is powered by Russian nuclear fuel. It's Russia, not America or Saudi Arabia, that is the world's largest crude oil producer. So we have such a jaded view in the West about Russia and their role, but people forget that they are such a major producer of energy. And you look at it, and it's been like this for the past 100 years. This isn't just an overnight phenomenon. So you look at the pipeline infrastructure. Countries like Germany get 40% of their natural gas from Russia. Finland gets 100%. Europe is addicted to Russian natural gas and oil, and it can't change anytime soon. The problem that Europe will face is the Asian consumption and demand, and the Russians are now working with the Asians, specifically China, to feed the dragon. And that has not existed in the past. So when these pipelines and infrastructure are built, the Europeans are going to have to pay even more for their natural gas. So, you see what's going on with the Russians and Chinese creating a competition to the IMF, the International Monetary. So they're going to create a new brick bank. And the agenda of the West is going to be decreased, and they're going to start trading oil not in U.S. dollars but in rubles and in yuan. And these sanctions are proving that they're not exactly working the way they intended. So the energy matrix globally is changing in real time, and where Saudi Arabia's biggest customer used to be the U.S., it is now China. So Saudi Arabia's future isn't with America's oil consumption, it's with China's. So the rules of the engagement are being written right now, and that's essentially what the Colder War is all about.
Yeah. And in terms of the Shale Revolution, do you think, you were talking about in Europe and all over the world, would this help influence or help wean any of the countries off away from Saudi Arabia or Russia, or are they still just a dominant player for a while?
Definitely a dominant player for the next decade or two, but if countries like the UK and Germany and Mexico can start developing their own shale resources in oil and gas, it will change the game, because a lot of Europe imports LNG from Qatar, which is the largest LNG plant in the world and built by Chevron. You'll see the game change. So it can't happen overnight, and it didn't happen overnight in America. It's just recently the Americans are benefiting from the success of the shale revolution, but it took 20 years to get here.
Yeah. And I was also wondering, in terms of Putin's plans, you do see the bilateral trades. He's done them with China. You see China doing swaps for trade out of the dollar. You see it now. You even see Germany making bilateral trade agreements out of dollars, which is very unusual because it's no longer non-Western countries, it's Western countries. In terms of Germany's future, do you see them moving more towards Putin and less towards America in terms of where they are in this sort of
Definitely.
Cold War?
Definitely. So look, France's largest energy company is called Total. They just came out and stated that the CFO of Total came out and said, we are raising $27 billion for our Russian LNG projects in partnership with the Russians, and we're going to raise it in yuan, we're going to raise it in rubles, we're going to raise it in euros, we're going to raise it in any currency except the US dollar, because with the sanctions, they can't do US dollars. The French have already turned their back on the US. Remember, it was Charles de Gaulle who turned his back on the US dollar in the 60s when he wanted his gold back, when he traded the US dollars for gold back. And that's part of the reason why Nixon closed the gold window. So moving forward, Germany has no choice but to do the same. Their electricity costs are over 2 times what the average American industry and residential household pays. The German economy is the engine of the EU 28. With higher electricity costs, it cannot be competitive in a global market. So Germany will be following the same suit, and eventually they will turn their back on the US dollar also.
Yeah. And in terms of Germany's electricity, in 2011 near Fukushima, I know they were saying they're going to close their nuclear plants. I personally think the reason they closing nuclear power is one of the reasons their electricity rates have gone up. Would you say that nuclear, that contributed a factor, and do you see them ever restarting nuclear power?
Well, look, right now the Germans are importing French nuclear energy. I went and visited a few of the nuclear reactors in Germany, and the reality is it's political lip service. They will bring them back online, just like the Japanese are, but it will take time. Angela Merkel is a scientist. She's a brilliant woman, but she's very pragmatic, and she needs to do what the politics wants. The real reason why Germany's electricity costs are so much higher is they've subsidized the green energy, and the German population is paying for that. And that is the main reason the electricity costs are double of what it is in North America.
And also, I just wanted to bring up one other thing. As you were talking about Nixon and the gold standard, and your book talked about dethroning the petrodollar. Does gold play any type of a role, in your opinion, of dethroning it?
In the last chapter of the book, we get into the details of all how to play the post petrodollar situation, and I think everyone, for prudence or insurance, should own some physical gold. But no, gold alone will not play the sole factor as it has in the past. You'll see SDRs and a basket of metals perhaps, but having a currency just solely linked to the US dollar or to the gold, such as the US dollar was in the past, I don't see that. I think it's going to be a hybrid of commodities, if that is the way it goes.
Okay. Yeah, I definitely see that. I don't know if they'll ever go back to a single, in just my opinion, personal reserve currency, meaning not just US dollar, but even just backed by one single metal as well. That's just my opinion.
But remember, with gold, that's the actual, I see gold as nature's currency, not a nation's currency, but a nature's currency. So the reality is, in the past, gold and silver, even copper was seen as money. And I think what you'll see in the future is a hybrid.
Yeah, that definitely makes a lot of sense, and there's no arguments from me on that. I definitely see that as a possibility. Of course, I'm not going to pretend I know what's exactly going to happen. All these, every country on fiat currencies, it's never been done before. And one thing I also wanted to get into is I think in order for people to to understand this new energy war, I think they need to understand at least the old energy war with Russia and the U.S. What I was referring to is in the 80s when Saudi Arabia drastically increased their production, and prices fell drastically. And in my opinion, that led to the the bankruptcy of the Soviets. And I was wondering if you'd be willing to do at least a little synopsis of, since you know more about it, of the energy sort of war around the first Cold War.
Sure. Well,
and what's different today?
Yeah, so when Nixon sent Kissinger to Saudi Arabia to basically get them hooked onto the petrodollar, he promised them a few things. Basically, if you sell your oil for U.S. dollars, you will get the American support, you will get the American military equipment, you will get the American military support, and most importantly, the House of Saud will stay in power. And those four elements created what we have today with the allyship between America and Saudi Arabia. When Saudi Arabia took on the petrodollar, Kuwait followed, and the rest of OPEC followed also. So fast forward 35 years, and now Saudi Arabia is the swing producer globally. But what people have to understand is most of their oil production all comes from the eastern side. And even though Saudi Arabia is majority Sunnis, almost all of the Shiites in Saudi Arabia live on the east coast, where the big deposits like Guahar is. That one deposit produces half of Saudi Arabia's 10 million barrels a day, one deposit. Now, whenever there's a revolution or war in a region, that's bad for oil production. So not only do you have the 7 choke points globally of the straits around the world, with the Hormuz Strait, where 1/3 of all seaborne oil is at risk because of where it is geographically with Saudi Arabia in the Persian Gulf, but more importantly is the king of Saudi Arabia is 91 years old, and the next in line is going to be 83. There are 7,000 princes vying to become king of Saudi Arabia. There was potentially a shaky House of Saud. If a revolution occurs in Saudi Arabia, overnight 5 million barrels of oil should cease to exist. The Strait of Hormuz would shut down, and oil would pop well over $200 a barrel overnight. And this is a very real situation that nobody is talking about. So that is essentially during the good old days where they could swing produce oil from Guahar, they could produce at $10 a barrel. But they've been injecting many more barrels of water per barrel of oil they produce. And it's not as easy. This field has been producing since Elvis Presley was singing Blue Suede Shoes in the 50s. These oil fields get tired, and the density inside them change. So not even talking from a political risk of, is there a revolution about to happen? There's technical risk to the Guahar field. So the good old days of the easy production are gone, and I will be visiting Saudi Arabia and seeing the Saudi Aramco fields and production centers, but it's a high-risk area, and that cannot be replicated today, what they've done in the past, just because of the cost of production.
Well, actually, when you just brought that up, when I actually think of peak oil, I actually think of what you were referring to as the end of cheap oil. I actually don't think of it as the end of oil. I always believe that there's enough oil, just what price. Would you agree with that assessment?
Yeah, well, when Hubbard first came up with the concept of peak oil in the 50s, it was based off of conventional production. Unconventional fracking didn't exist back then. And he was right off of basically looking at the decline curves of conventional wells. With new technology, you can have enhanced oil recoveries. And the reality is it's going to get better and the technology will get there. But, the question is at what price? Now, it all depends on where you are in the world. Producing a shale well in Europe right now is going to be much more expensive than a shale well in the Bakken or the Eagleford. So, it's a very difficult thing to generalize. But if you look at the U.S., for the Americans to produce, 7, 8 million, 9 million barrels a day of oil, they can't do it at $40 oil. So your comment of the peak cheap oil, I agree with that. Right now.
Okay, thanks. That's pretty cool. You agree with that, or at least peak cheap oil. And one other thing is, I rarely hear people talk about it, but in terms of the nuclear, or not the nuclear, but the uranium bull market, right now, or well, maybe it's not technically in a bear market, but the upcoming one. Right now, the market's obviously focused on Japan. Where would you say we are in? Are we still in a bear market, but it's a bottom-basing bear market, or we're in the very, very, very beginning stages of it increasing? Because we did see uranium go from 28 to 36. It went down this week, I believe. But, so I do believe it is possible that we could be just bottom basing, or it's the beginning stages of a uptrend that no one notices. What do you think?
Well, a year ago I told my readers in presentations that until Japan starts bringing back the nuclear reactors, we're in an underfeeding market. And what that means is single work units, SWUs, are very cheap, and the Russians can reprocess their tails for very low cost. And the reality is until these nuclear reactors come online, or until the new reactors that are built in Asia replace the uranium demand, because there's no shortage of U-308 around right now. And because the reactors aren't refining it because they don't need it right now, there's a glut out there. So that's what the spot price has been. Now, the reason it popped from $28.50 to $36.50 this past summer was essentially people were worried about the Russian sanctions. They were worried about the strike up at MacArthur River, Cameco's mine. And, the other aspect that nobody's talking about is Kazakhstan. What happens there when their leader, who's 80 and change, passes on? So there's a lot of changes in it. I think that you'll see the markets in uranium go sideways until the uranium consumption from these reactors in Japan come back on, or the reactors in Asia are built, or if Putin decides to pull the plug under the American uranium that he feeds. Remember, 1 in 10 homes in America's fuel comes from Russia. That's 10% of all of America's electricity is generated from Russian nuclear fuel. So, if there's some sanctions and Russia pulls the plug on the exports of uranium, that will cause a plug. Or if something happens at Cigar Lake in Athabasca Basin, or if something happens in Kazakhstan, there's a lot of reasons to be very optimistic about uranium right now. But it's a contrarian investment because so many people hate the sector right now.
Yeah, and that's generally would you agree, a good time to buy?
Yeah, but you have to ask yourself, what is your time frame? I think it's going to be a tough market for another year or so in uranium. But if you have a 5 to 10 year time frame, you're laughing. It's a great time to buy.
Thank you. So I have to say, it's nice interviewing you. I consider you one of the best, maybe the best energy analyst in the world today. And if people wanted to find out more about you, how can they do so?
I just go to the Casey Research website, and we have a weekly free letter that comes out on Tuesdays. I think that's the best place to start, is at the Casey Research website.
Thank you. So we look forward to having you back on in the future.
All right. Take care, John.